Why are mortgage rates higher this week? Hi, this is James Hecker, Mortgage Advisor, NMLS number 214601, bringing you the weekly mortgage rate recap and forecast. And last week, mortgage interest rates were looking better. There was volatility throughout the week, but they were improving, which is a good thing, until we got the Friday jobs report. So the jobs report indicated about 517,000 new jobs being created when the expectation was about 185,000. So that was significantly greater, and that's just not good for interest rates. So the mortgage interest rates ended up about the same at the end of the week as they started, even though we had been improving through the week. Now the feds are expected to continue to raise the discount rate, probably a little longer than what it was that we had initially anticipated. And they also have not given us an indication of what the terminal rate will be. And that just means at what interest rate the discount rate would be before they would stop raising it. Instead, they intend to depend upon inflationary figures and numbers. And so the sooner inflation gets into the range of 2.5% that the feds want to see, the sooner they'll stop raising the discount rate. And that will have an impact on other rates like HELOCs and credit cards and things like that, and eventually mortgage rates as well. And we might even see them lower the discount rate at some point after that. We just don't know when that's going to be. The data firm Black Knight, a large data collection firm, issued a report yesterday which showed housing prices declining by a little over 5% since June. And there's been a lot of talk about declining prices, and there is, that would be helpful for buyers who are dealing with these higher mortgage interest rates. Having a lower purchase price may offset some of that, but the reality is that many markets really aren't showing much of a decline, especially my market, the market that I'm in. There are still such low levels of inventory, so few homes listed, that buyers are still, for the right property, priced right in the beginning, there's still competition for that. And so, we just don't see the 15-20% decreases in home prices that some doomsayers are really saying is going to take place. I just don't see that happening in several markets. Now, some markets will decrease maybe by 10-15%, but in our market, I just don't anticipate that. So if you're wanting to get into a home, and by the way, activity for home buying has gone up. It stopped the beginning of the year, literally almost came to a stop, but mortgage purchase applications are up. More people are getting their heads around where the mortgage interest rates are and realizing that they're still low compared to history. What we've had in the past few years with interest rates has been subsidized and not realistic. And since those subsidized rates have ended, mortgage rates have gone up, but they're still lower than what they had been for, decades before. So if you want to see how this market would affect your ability to buy your first home, to upgrade into another home, to downsize if you wish, by all means, give me a shout out, 661-714-2145. If you're ready to buy, or if you're not, if you want to talk about what is it going to take to get you to that point to be able to buy, I'm happy to help. So please let me know if I can help you, and let others know as well. I'm here for you, and I'll talk to you soon.